Hello friends, good evening and welcome to seminar or day 3 of this series on forensic accounting and investigations. Today is a special day because we have with us our Central Council member C. Anil Bhandari, one of the most important personalities in the scheme of things for forensic accounting standards that ICI is gonna roll out very soon. And today we are gonna have discussion on that as well. And furthermore, it is special because our faculty today, CA Lakshmi Rao Madam, she celebrates her birthday today, and on her birthday, she's addressing us. So I think let's join hands and wish her a great birthday. And thank you, Madam, for coming at a very short notice and filling in up shoes of our earlier speaker, Sharad Kumarji, who's actually unwell. He's suddenly got fever and therefore he couldn't attend. And Madam agreed in just over a one night, in a span of one night, she's prepared to address all of us today. Thank you, Madam. Before we could start, I have Rishabh and Sharon also with me, the coordinators for the event. I would request our Central Council member, Anil Bhandari, to please address us and share his views about this new opportunity, this fantastic opportunity called forensic accounting and investigation. Over to you, Anil Bhai.
So, thank you, Arpit, and welcome, Lakshmi ji, and the coordinators as well. And I think this is a very meaningful series that you're having at WIRC. I would want to start by saying that you would probably not even see frauds tomorrow. And I've said this in maybe one or two meetings that I've been to recently. And people turn around and ask us, then what is the need to have a fraud and forensic standard? And let me just try and take you maybe a couple of decades back where we had these property frauds, we had these check frauds, and people used to, do signature copying and so on and so forth. These used to run in maybe $1 million, $2 million. And the control that people envisaged was that, you put up somebody who's very responsible or very close to you in your family to try and control that. Then 2 decades back, or maybe 3 decades back, you had frauds like the Ponzi scheme, the balance sheet frauds of the Enrons of the world. And these frauds moved on from $1 million, $2 million to maybe 50, 100, $200 million and so on and so forth. And these was completely followed by greed and the control that people had, that audit committees were made more responsible in the corporate world and so on and so forth. And you had Sarbanes-Oxley, which came in to have more controls within the organizational world. And moving from there, you then had the SIM card frauds, the credit card frauds, which used to be in the tune of maybe more than $200 million, $500 million, and so on and so forth. Very recently, if you look at frauds, and I'm talking about the technology connotation also today, because of course technology drives or enables most of the businesses. You had the frauds like the SWIFT frauds. Now these frauds literally run in billions of dollars. And I'm not sure if anybody here is aware, but in the SWIFT fraud in Bangladesh, for example, the fraudster made a spelling mistake, and that is why almost $900 million did not go to his account. Only 100 million or maybe $80 million went out to his account because he made a mistake with the other account spelling and the money actually bounced back. But can you imagine, in a few seconds, $1 billion could have moved out. So why I keep saying that probably you'll not see fraud tomorrow is a perspective that frauds, which you and the forensic that we used to do maybe 2 or 3 decades back, has completely undergone a change with the fraud and the forensic that you see, which happens today. Just to wrap this conversation up, in today's time, most of our investments is in the cloud. So for example, if you invest in stocks, securities, all the stocks and securities are not with us. They are with DMAT companies like CAMS, Carvey. So can you imagine the investment of the entire country is actually not with you? It actually sits with just maybe 1 or 2 companies. What happens in the future if companies like these try and do fraud? If you look at broking houses today, broking houses are not manually run. They're run by algos. So what happens if 4 large broking companies across the world get together and create a fraudulent algo in such a way that the entire market makes you lose billions and billions of dollars? So what happens if tomorrow accounting is likely to be completely online with digital invoices coming in? Frauds are likely to be happening on real-time basis. So the perspective that I gave is that you would probably not see frauds tomorrow. What it really means is that the frauds would happen at the time and pace that none of us would be able to even comprehend or understand. And by the time that we understand it, the impact of the frauds would be so large that companies would go down, governments could probably go down, and so on and so forth. So I think it's very important for us to understand the fundamental shift in fraud and the way that it happens, and also then experience and appreciate the fact how do you even control them, and how do you bring out standards to make sure in the future, if there's something like this which happens, there are people available in the market or in the ecosystem to be able to do forensics around it. And with that perspective in mind, the Institute came out with the Fraud and Forensic Standard, and which I believe is one of the first of its kind in the world, to ensure that professionals like you and me have an ability to, of course, do the fraud and forensic reviews, which I think we were doing it in the past as well. But we now have a guidance, we now have a structure, we now have a standard wherein we can go to the market and say that, look, you know what, we conduct our fraud and forensic investigations or review in a particular standard, which is then also guided by the institute. And if something goes wrong, be responsible to the institute. So in a way, chartered accountants have now become a little more appreciative of the fact that we have a standard, but the market would appreciate the fact that chartered accountants would be able to offer quality services for the simple reason that they have a structure to follow, which most of the other people don't have a structure to follow. I think Arpit was talking about tenders coming out in the market, and he was also talking about before we just joined in terms of how do you really price yourself and so on and so forth. Members, I believe that this is a very important service. This requires high skill sets, and it also requires high credibility in the market. There is no way that you can try and undercoat stuff like this, because the moment a credibility is lost in a fraud and forensic review, you would actually tend to lose your practice, because fraud and forensic reviews are all to do with and to do with credibility in the market. So I would suggest all of us here on this forum today that let us make sure that we understand the scope right. Let us understand the skill sets required right, so that we are able to make sure that we appropriately even quote in the market. And I think quoting and money is just one aspect of it. I think the quality aspect is very, very important. So I'm really happy that WRC has brought out this series of program for you to be able to train yourself, understand and learn about the fraud and forensic standards. And I'm sure this is likely to be very, very useful to all of us. So in the new times, when the frauds are likely to be super fast and they're likely to be really, really large, and the impact would be tremendous, so to say that organizations can close down in a day, and our ability to be able to respond to a scenario like this is likely to become very, very important. So I think I would only want to wish you that please have a great learning. I think you have some great speakers here today, as well as your faculty, and I'm sure they will take you across this entire journey. But I think the institute has been a thought leader, I would say, in terms of putting up a fraud and forensic standard. And I believe that the standards have just come out. They would evolve over a period of time. And our ability to react to governance, our ability to react to government, our ability to react to institutions within the government organizations like the Serious Fraud Investigation, or any other institutions like the RBI and so on and so forth, is very, very important. And if we were to diligently follow these standards, we will be able to impress upon these institutions that, chartered accountants are one very reliable set of skills and people that we have who are able to deliver consistent quality. So thank you, Arpit, for inviting me here today. I believe this is a good deed, and a good, not really a deed, but a good foot forward by y'all in WRC to be able to take this up and deliver the content to our members. So thank you once again, and Lakshmi, thank you so much, and all the best to all of you for our fantastic, to Sharon as well as Mr. Rishabh Jain to be able to take this forward. Thank you.
Thank you, sir. Very, very thoughtful and very insightful, actually. And believe me, I think it's a very bold step that we've taken. The theme at WRC is bold. So when we bring out our forensic audit standards, forensic accounting standards, I think it will streamline so many thought process that every chartered accountant is carrying today in terms of how to address forensic accounting largely. And today with Lakshmi madam, I think we'll also discuss about how do we deal with agencies, different experiences and case study maybe in terms of hygiene, how as a chartered accountant we should keep and maintain hygiene when we are dealing with some authorities like these. Of course, so moving on, thank you sir once again for taking out time and addressing all of us. I would request Sharon if you could now quickly introduce our birthday girl, I would say, and so that we can start off our session immediately. Sharon, over to you.
Yeah, sir. Thank you so much, sir. Uh, today, now we are going to start. Now we are going to start with our session today on the first topic, which is hygiene testing of forensic audit. And let me introduce Lakshmi ma'am. She is a fellow chartered accountant with experience of 32 years. She is in charge partner of the Mumbai branch and deals with the operations of SNA in Western and also Northern region. She has specialized herself in carrying out forensic audits, stat audits, internal audits, stock audit, risk management, and special audits of various organizations. She has also handled over 80 forensic audit assignments on behalf of SEBI, Central Bureau of Investigation, SFIO, and Enforcement Directorate, Economic Offence Wing of Maharashtra, PSUs, private banks, and many more. Also, she has handled due diligence, IBC audits, and investigation cases for private corporates, MNCs, and foreign companies. And to talk about her cases, she has also handled Sharda Chit Funds, Kingfisher, Sterling Biotech, DS Kulkarni, Speak Asia, Allied Financial Services, and many more. Thank you so much, ma'am. Welcome to our today's session. Please carry out the session, ma'am. Thank you so much for coming.
Over to you,
you,
madam.
ma'am.
Sharon, over to you, madam.
Good evening to all. It's
Good evening.
From my colleagues. Actually, I was reluctant to come on today because so I'm very short. Tonight I got the call and I said I will
Thank you so
not.
much, ma'am. Hello.
Can you hear me?
Ma'am, this background
Yeah. I know background. When I hear any disturbances, it's absolutely silence.
There is some echo coming in, madam.
Yeah, there is some echo. Mishra ji, can you see on your part?
Madam, please continue saying. We'll figure this out.
Okay. So, I'm in a closed environment. Maybe if I open it, might not echo. I'll just try my best.
Yeah. मिश्रा जी कुछ डिस्टरबेंस हो रहा है कंटिन्यूअसली आवाज आ रही है लक्ष्मी जी की आवाज है
सर उनके लैपटॉप का जो स्पीकर है ना उसका कुछ इशू आ रहा है
ओके
So still echo is coming?
No madam, it's better
yes
than
fine. Okay, now coming back, what have been asked to give a lecture on hygiene on forensic audit, auditors, how we take it forward, and we do forensic audits. Basically, I have ample experience with working with regulatories and investigative agencies. There are several challenges when we work with different agencies. Each agency, investigating agency, has its own its own rules, act and regulations, and we have to perform as per their expectations. And it is not the same what we do for SFIO or what we do for ED or what we do for CBI or maybe EOW. They are independently each act independently says the rules, put the rules where they have to follow those rules, and we have to perform and give the results and the evidence as per their particular expectations. Suppose if we are doing for Enforcement Directorate, the PMLA Act is what once the ED. So they mainly go for money trial where there is a fraud. Sumoto ED cannot take any action on frauds. There should be one FIR filed where any police station or anybody has taken up a case where there is a case registered, then ED comes into picture, then it will take up that case. So when we do for PMLA, under PMLA Act, we have to see that there is a crime. So crime has to be proved. Then after crime is proven, we have to see that the evidence is there, that an auditor can provide the evidence for such crime. And out of that crime, are there any profits that were arising out of such crime? So these profits have to be traced back, and what is the advantage of taken by such fraudsters? As a forensic auditor, we will be asked to provide the money trial. Mainly in ED, they are interested in money trial because fraud or crime is already registered somewhere else. So when ED comes into picture, it considers that there is a crime already committed and it is being registered. Fraud is committed, it is being registered, so there is a crime. Then what happens to the process of the crime? So when they see what are the process of the crime, they go to the bank accounts and they trace back where the money is arising and where the money is being landing at. So other than this, they don't look into any as such strictly what balance sheet, what is the disclosures, what are other things that have been mentioned by the auditor in the audited balance sheet. So they do not go by all these in detail normally, unless otherwise the forensic auditor who is actually doing the investigation makes them understand whether the transaction of payment from A to B is legitimate or not legitimate has to be proved by the forensic auditor. Otherwise, any payment from one organization to another organization, they consider it as a process of crime. Benefits have been transferred to somebody else, and there is a money trial established, so they are accused. So that is the funda they follow. But here, forensic auditor has an important role to play, saying that whether this transaction of transferring money from A to B is legitimate or illegitimate. If the transaction is legitimate and is a business transaction, there is no need to worry for that. So we have to establish that this is a transaction of legitimate. We have to give the evidence for such kind of legitimacy of the transaction. Unless we do that, it's ED takes that transaction as money being siphoned off. For example, in Manya case also, when there is a bank loans were disbursed, part of the loans were transferred to its subsidiary or its group company. So just by mere transferring from one account to another company of its group or sister concern, it by itself is not a diversion or by itself is not a siphoning of money. If there is any business relation between the two subsidiaries, two companies, if we can establish that, and the balance sheet is also that both auditors of both the companies have recognized it and said it is legitimate, I think we can prove that it's a legitimate transaction. There is no money siphoning off, or there is no diversion. So it is the responsibility of a forensic auditor to make the investigating agency understand better whether the transaction of passing money from one account to another is legitimate, and auditors of the respective companies have recognized it as a legitimate transaction or not. That is more important. Otherwise, unnecessarily the signatory to that company balance sheet also is called for question. So this is the very important role and forensic auditor has to play for regulators. Investigating agencies. Even if you take SFIO, for example, which is considered for investigating in all the provisions that are applicable under Companies Act. So that includes money diversion, siphoning, fraud, and also provisions, non-compliance of Companies Act, with disqualification of directors, whatever sections that are being mentioned in Companies Act are being fully SFIO takes into consideration and look into whether all accounting standards are followed, not followed, auditor had properly dealt with each transaction, each development in the company, and had he disclosed, had he complied with the ROC, with MC and all that aspects SFIO go through. And it also go through money that has been raised by the companies from banks, maybe from GBR, FCCB, whatever financial instrument we have. If there is a money that has been raised by the company, the SFIO get into every aspect of the money that is utilized by the company. So how, whether that is being used for the purposes for which it has been raised or not, they will fully go through each and every rupee they map. SFIO, every rupee they map. Similarly, they even compare the books of accounts with the audited balance sheets, where most of the time SFIO finds generally books of accounts does not match with balance sheet. What is signed by the auditor does not match with the bank books of accounts. Suppose, for example, in a company they have maintained accounts in Tally. They prepare the books of accounts again. Then they compare balances with the audited balance sheets. If they find gaps, they will call and question record statements. So these are all being done by SFIO. But here there is one point which auditors have to understand. If there is any amount that is being specified in the balance sheet and it's not matching with the books of account, any audit journal entries are being passed at the time of signing the balance sheet has to be clearly maintained. Those records are very, very important for auditor to maintain. So if we do not maintain what final audit entries have been passed, the gap between the books of accounts and the audited balance sheets will not be able to justify by the auditor. If the company doesn't justify, company is anyway comes under a huge part. But auditor, to keep his records clean and clear, able to explain himself when investigating agency is calling us for explanation, we need to keep the records that what are the audit entries, what is the balances in the books of account, what is the balance that we are reporting in the balance sheet. There should be a clear every entry wise to understand. So this makes easy for a forensic auditor, statutory auditor also, to see that daily records are clean, clear, and produced as and when called by whomsoever, whether it is Ibbi, whether it is SFIO, whomsoever they call. So this makes statutory auditor clean and clear, and he better maintain all the evidences, all the entries passed, the reasons why they have passed those entries, why the amounts are there mentioned in a different way, what is the reason for grouping, regrouping. That is very important to keep the records, because tomorrow some questions raised on any balance sheet that we have signed, we will be in a position to reply that. So this is very important. Mostly investigative agencies see the differences and just report it. Many times even auditor may not be called for the explanation. So better once the audit is completed, books of accounts are closed properly by the client and whomsoever we are signing for. So while doing as a forensic auditor for SFIO, we generally go into every aspect of the books of accounts, the funds, the utilization of funds, bank loans, GDR, whatever way the company has raised the funds, every fund, every rupee utilization is reported by SFIO. It is in very, very, very detailed and minutely investigating agency across all other agencies. SFI goes into every aspect of the balance sheet, every aspect of records they go through. They prepare a comprehensive report. It is a comprehensive where it runs into sometimes thousands of pages of report where they record the statements from the companies and also have auditors and also handling SFIO forensic audit is different where they have every evidence from company as well, accountants as well. They call for auditors, they call for promoters, whomsoever they find, they call and they have to vacate the records. They record the statements and based on the statements they go ahead with the investigation. Sometimes some accountants give some information, they get the clues. Based on those clues they go ahead and investigate. So SFIO has more power in this area. So coming to CBI goes wherever there is a fraud, when they are more on the fraud and how the money is siphoned off and what are the assets and use of the funds they have siphoned off. So whenever there is a case registered by maybe banks or maybe any other part with the RBI, they first and foremost ask for a forensic audit whether it's done or not. If it is done, they ask for the report. If the bank has not done the forensic audit, they advise the banker to do the forensic audit and submit the report. So many a times when we do for banks, we are supposed to give a conclusive report. Here we have always a challenge. What is conclusive? Can all forensic auditors give conclusive report for the forensic audits that they are doing? Do we really get sufficient evidences to produce in a court of law where any question comes tomorrow? If you term it as a fraud, we have to have a clear evidence for such kind of saying that word. Using a fraud is not a simple to just to use. You need to have sufficient evidence. So that evidence has to be, for a forensic auditor, it is always a documentary evidence. Oral evidences, overheard discussions or something, even mails, just mail does not will not give any, may not be a conclusive evidence. So it's like if I'm writing a report in a conclusive manner and saying there is a fraud, there is a diversion, there is a siphoned off, money was siphoned off. So if I'm saying diversion, many a times bank asks, what is the purpose of loan that is being sanctioned for? So if it is a project, then part of that money, if we are transferring to its subsidiary or maybe to associate entities, then in our forensic audit reports, generally we are saying it is diverted. So not all the entries or all the funds that are passed to subsidiaries or to sister concern necessarily be a diversion. According to reason, many a times in a process, say for example in a manufacturing process, most of the time 2-3 companies share the processing part of somebody does a part of a processing function, the other company does the second part of the manufacturing function. So we need to examine and see the purpose for which the payment is made. If the purpose is legitimate and the business transaction can be sufficiently proven, then there is no diversion. if there is any no such reasons to explain why the company who is paying or who is receiving, and there is no evidence, there is no agreement, there is no purchase order, there is no clear delivery of the product by one company to another, the product or the services, if that is not being transferred from one company to another company, but the funds are transferred, then that can be termed as diversion. So this aspect a forensic auditor is supposed to particularly see and go through 360 degrees of the transaction for every payment bearing company to another their group entities. So unless we do this, we cannot use the word diversion. Most of the time it happens when we use the word diversion once the company pays to its associate company. See, associate company disclosures are already done by the statutory auditor. So it is not necessarily be a diversion. Statutory auditor must have gone through all that. So if there is enough explanation and enough reasoning for such kind of business transaction, I do not think there is any diversion. So this has to be clearly proved by a forensic auditor at the time of investigation, whomsoever it could be. So unless we say this is without any passing of any services or any product to the associate company, and only mere funds or transfers are happening, then we can clearly give evidence for such kind of transactions and say there is a direction. So siphoning of funds is where there is no business activity, there is no business relation between subsidiaries or maybe with other companies, where it's just a payment, funds are transferred, and from there the money is out of the system. So then there the end use of the funds are seen, then we have to reach out to the end use of the transaction funds and get the evidence where these funds were used, then that should be submitted to the investigating agency. In our report, we have to produce along with our reasoning for such end use. Then we can report it as a siphoned off and there's a fraud. Fraud means from the beginning of the transaction itself, there is an intent to do a fraud. Suppose the company to whom we are paying does not exist, or if the company, the vendor is not existent, there is no business activity being carried out by the vendor, and there is a payment, there is a purchase order, definitely there is a fraud, because we can say the company which is doing the payment is aware of the activity of the vendor, that it is not functioning, but still they are paying. So if we can establish this, we have to establish this with the evidences and with the proper reasoning. When we can successfully give the evidences and say, in spite of this, there is a transaction and there is a transfer of funds from this company to that company without any business activity, with non-existent company or a paper company, then we can say, then we can prove, then only we can use the term as fraud. Otherwise, I have come across cases where the auditor has said it is a fraud, and the company has gone to court and challenged the word fraud. Why we were termed as fraud? What is the fraud proof? So we also get into shoes of the accused many times by not getting sufficient or reasonably enough evidence to show in a court of law that there is a fraud. Without that, we will be in trouble tomorrow. So we need to have a clear evidence to whatever statement we use, either the word when we use diversion, when we use siphoning off, when we use fraud. We need to have sufficient documentary evidence without which we cannot report any frauds or we cannot use these words as such. Because tomorrow something goes wrong and we are unable to prove our part of our work has no value. So this is very important aspect. When we come to SEBI, SEBI mainly uses its investigative angles only when there is a problem, there is any complaint received by it from any investor grievances, any investor complaints about any misrepresentation or any loss in any particular company of their investments and all, they will act upon such complaints. And also they go on price fluctuations and price manipulations of the shares, securities in our market. So SEBI is more into these areas than directly getting into diversion, siphoning, fraud. They don't go into these unless there is a complaint, investor's complaint. So investor complaint, when they go in detail about recently now they have set up a new department where they are investigating mainly into manipulation of audited balance sheets, financial statements, frauds. They are investigating now. Earlier, they were only acting on any investor complaining about any company's internal problem or any whistleblowing mechanism, there is any frauds, there is any such kind of things happening. Then they are going into investigation and then they are investigating them, making the passing the orders. But here again, they will only investigate to the extent whether there is any manipulations or misrepresentation in the balance sheets or any other aspects by the company in their balance sheets based on which the market has moved and reacted upon these balance sheets, and then there was a loss incurred to somebody because of these things. Unless this is proved and with sufficient evidence, they will not pass any order. They have to have all these evidences clearly. So when we are doing for forensic audit for SAB, we need to understand what transactions made the balance sheet misrepresent, or what was the manipulations the promoter or anybody must have done to make get the investor believing in the audited balance sheet, by which he, by believing such the numbers or the financials, he acted upon and he lost the money. So when that can be proved, then only the SEBI is going to pass an order against the accused. Otherwise, there is nothing. Now, coming to brokers, where SEBI goes, SEBI nowadays also has come up with the regulations where it says brokers are misusing the investments of the investors, mostly if you see allied financials or even few more where you see the other companies' shares also were being diverted and they have cycled off the investments in the demat account by the depository participant. So even the brokers also have cycled off the money and they have taken those monies for their personal benefits and they created assets of the funds they diverted. So basically, SEBI now comes into picture whether really the funds were being raised by the broker by misusing the investments of the demat account of the investors. Were there any permissions given by the demat account holders or not, and whether there is any written power of attorney given to broker to use the investments from the demat account. These are all aspects they see whether there is any misutilization of the investments in the demat accounts are being seen. Most of the time nowadays, brokers in recent past have misused the investments in demat account without the knowledge of the account holder, investors. So they have lost the money in the market and they end up losing the money. But when we are investigating, the SEBI is only limiting itself to the extent the investor is losing money. To the extent what the network certificate they have given, mostly in brokers accounts, the network certificate is given again by the auditors. I think I have gone through many times the auditor who is certifying network mostly are given partial information by the broker. So based on that, they issue network certificate. In fact, that network certificate happens to be wrong, grossly wrong, not considering certain aspects in the books of accounts. Mostly they are not considering the assets, mostly they are not considering the liabilities they have. So many aspects they are missing out to consider in the network certification. So based on which the auditor here again is in trouble many a times. Because here it is not the auditor who is making mistake, it is the broker who is giving incomplete information. So how do we ensure the information that is provided by the broker to the auditor who is certifying its network is having full information or not? This aspect every auditor has to take care while certifying this. Otherwise, this is going to be big trouble for the auditors. So our records when we certify network certificates or when we certify the brokers' books of accounts, we require to keep sufficient information, documentation, evidences for anything that we are certifying is a must. And also better to compare it with the previously audited balance sheets. Many times balance sheet contains assets, but in network certificate we are not considering the assets that are already mentioned. So this gap also glaring problems are coming out with two auditors signing two different financials of the same broker. So whenever an auditor is doing these small things should be taken care while certifying the audited balance sheet or certification or whatever. So that is what SEBI is doing now. Coming to income tax, nowadays they are going into investigation at a deeper level. It was not like what it was before. Now they are going into much details. Here, the main aspect and main interest of income tax was only to collect taxes and undisclosed income and taxes on the undisclosed income. But now it is going beyond that and also getting into Benami assets, Benami under a Benami Act. They are also going into three earlier income tax used to go only for 1 layer. Now they are going more than 1 layer, 2, 3 layers also, which you can see. We have an opportunity to investigate cryptocurrency cases also for EOW and ED also, based on which we have even come out with, we have seen income tax is issuing notices for paying taxes and explaining the benefits the SSE is getting out of the cryptocurrency transactions. They are able to unearth certain transactions. In cryptocurrency, there are about 20 exchanges in India itself. Many investors are investing in cryptocurrency and there are regular transactions. And almost more than 10 million cryptocurrency investors are there in India. Income tax now recently is coming out and it is issuing the notices to SECs for asking and explaining the transactions on cryptocurrencies. So, are you ready with this? So they are doing a lot of homework on sending these notices to SECs. So, are you ready for this? So just not what bank transactions we are looking at. It's not just balance sheets. There are certain other areas which we are still lagging behind, but things are coming out with very serious mode where the crypto also has taken into even government were actively sending these notices and tracking the investments, taking the data from exchanges and also tracking the investors and the benefits they are making out of it. Now, chartered accountants have to gear up how they will go ahead to represent their clients or their transactions in this area. So this is a new area where we have to be ready with our inputs in this, whether finance ministry now says it will send a finance bill, crypto bill where they are recognizing, they are going to recognizing it as a currency or as an asset. So for income tax, whether it is realized as asset or currency, doesn't matter, because so far in cryptocurrency, if it is an income or a loan or unexplained the deposit, advance, again income tax will ask the questions and we have to explain there they again will tax such kind of benefits or transactions. So if it recognizes as an asset, again there is an issue where we have to disclose whether it's a capital gain, short-term capital gain, all these we have to explain. So we have to be ready with what we are going to do with this kind of, other than what our routine, our regular financial forensic, we are doing whatever financial audit, statement audit that we are doing. This is something different area which is huge now. So here also fraternity has to look into that, help our clients and also represent the government. Even I think Ibbi is also into it, UW is also into it, mostly CBI will come into picture now, the income tax is coming actively on this to track the transactions. So basically, these are the investigating agencies which are doing. Now coming to, for which we have done several cases. I have myself had at least 18, more than 18 forensic audits where different types, different challenges. What we give a report to ED not necessarily be the report that we submit to UW. Or I don't mean to say the facts will be the same, the evidence will be same, but there is a limitations for each regulatory, each investigating agency. So PMLA, they don't go beyond a particular monitoring for the process of the crime. They do not go beyond that. And it's a balance sheet manipulations, misrepresentation, they are not bothered. They don't go into be as detailed as maybe SFI goes, maybe 7 goes. So if we write more about on the financials to ED, that doesn't, maybe will not achieve what is expected by them. So we have to understand what their expectation, what is their scope of work, what is the case and what they are asking us to do. That is more important when we are playing a role of a forensic auditor. When we are playing the role of a normal statutory auditor, any other auditor, then we definitely need to have every document that we are signing, for every number that we are signing, the justification, how we arrive at that number, that all has to be maintained. I have seen where in one case the investigating agency has called for 13 years old records also. But that auditors, by rule, after 7 to 8 years, they don't need to keep the records, but however, they call for. They might even give summons. So are we ready for this? So that's the big challenge. So are we going to keep 13 years old record with us? The reasoning, do we have those same people who worked on the case with us, when a new person can come and explain how those numbers flow in? So these are all challenges. So better to keep things in a better way to explain tomorrow if any questions raised. So I would suggest all my fellow chartered accountants to keep their records very clear and self-explanatory and justification for any numbers that are flowing in for audit that they are signing, the financials that they are signing. At the same time, when we are doing as a role of a forensic auditor, we have to keep in mind that we are going to maybe question, not directly questioning, but definitely questioning on their balance sheets and analyzing. While analyzing, we question their integrity, we question ourselves when we are saying whether this auditor has done rightly or wrongly. We question and reply ourselves. Then we analyze the data. So when we do that exercise, we have to remember we are questioning our fellow chartered accountant. So will he be in a position to receive this information if I am being the statutory auditor, if I am the style signatory for that financials? At least we have to put ourselves into that role and see, is this possible? Is this that promoter of the company or management is giving or possible to give, not to give? Can they take? They cannot take. Suppose many a times agreements they don't give. You sign certain numbers. So we have to logically think whether the auditor is getting provided with this all information by the companies. Because many a times I have been asked to find the role of an auditor. Many times I had opportunity or whatever I have to say. What I say is, I questioned also, I interrogated auditors also. So many a times justifying for whatever we are signing, we are working on is more important. Similarly, when as a forensic auditor, if I am doing the same work, I have to understand the auditor, understand the books of accounts, vis-a-vis and my report, and then there's a role of auditor also. Now we have to write in the report. So I suggest our records as a forensic auditor also, if I'm saying in the role of auditor, if he is grossly negligent or he failed to report or if I'm using such kind of words, I have to have sufficient reasonably sufficient enough to prove in the court of law tomorrow if I am pulled to the court that this is a misrepresentation by auditor. This is a not a misrepresentation, but is information possibly not provided by the management to the company, management to the auditor. So I should be in a position to take a decision at that point. So there is no opinions; it has to be a decision. In forensic audit role, we have no option to express our opinion at all. We have to say yes or no. If we say yes, we have to provide evidence. If we say no, we have to provide the evidence. So, whenever we play a role of a forensic auditor, definitely step by step, we have to put all the information that we have, go and go through each transaction 360 degrees and understand the transaction, then analyze them, then accordingly report in the forensic audit report. Otherwise, tomorrow we will be called as witness. I have been called as a witness in court of law many a times in session court, many a times in Bombay High Court, many a times in NPID court. I have several times attended the course. So the question they ask is, many a times we should be ready with what we are saying in the report, the statements that we are making in the audit report we have sufficient documents, and documents are conclusive and reliable. Not that somebody said this, somebody gave this. It's not that way. We have to take our independent view on those informations and take a decision. We should have enough confidence on our understanding of the subject, understanding the case, and reporting accordingly as per the expectation of the appointing authority. So this is my this we have done in many cases successfully. Mostly we have done this. We could prove these with evidences. So even in case of Maria's extradition case in the UK, we could prove sufficiently that in principle there is a manipulation and financials of the company at the time of sanctioning, at the time of applying for the loans by the company with the banks. So the lenders relied upon those misrepresented balance sheets. So there is a fraud, there is a misrepresentation, there is a diversion. So these are all things we had to prove in the court of law through our evidences, documentary evidences, relying on the same way the London court has passed their orders. Similarly, when we have seen in a very big case where many times auditor unknowingly gets trapped in the sense unknowingly signs certain balance sheets. Suppose I have seen a case where company has raised FCCB funds, foreign convertible currency bonds out of India through Green Channel, and there is every required permission and licenses from RBI. So they have raised the funds. Then they were to redeem the funds after 5 years, which they failed, and the overseas trustee had approached Bombay High Court and applied for winding up order. Winding up, and the Mumbai High Court has ordered for winding up of the company. But that time, after passing the winding up order, we have been appointed by SEBI to investigate what happened with the funds. So surprisingly, when we saw there were huge assets as per the audited balance sheet, huge investment overseas. But when we went into deep into the balance sheet, we found that there are no assets, there are no investments. It's where all numbers were made. There are no investments outside the country, and all the subsidiaries which they claimed to have investments, there are no investments. We proved them there are no investments, and the sales they claimed as through exports of software, there were no exports of software. And how did we prove? We proved that the vendors from whom the software was purchased found to be bogus. Then when we saw certain development expenses that they paid to certain vendors who developed software for them, then we approached them. We understood that there are no such developers, there are no such companies who are developing and giving such services to this company, accused company. And when we found that there is no development of software, there is no purchase of software, what is it they have sold? So this is the question we made to ourselves. Then we went on for investigation. And because none of the FCCB funds are all outside India, we have no access to any record that are outside India. But however, we could make the case end to end, and we could prove successfully to SEBI that the money that is outside India was brought into India, and that money was used in India for acquiring assets. We have given a list of assets. We have shown at least 200 crores out of 450 crores investment which were made into out of 450, 200 crores investments were made in properties and in other projects by the company. So accessible funds were raised outside India but not into India and acquired assets. So they were said, and this is the unique case where we could get Swiss bank accounts formally from Swiss government to Indian government, and from there we got the statements where we ultimately could prove that what we reported was all perfectly correct, and we were even called by High Court judge saying appreciating for our wisdom findings. So the same case was investigated by Ibbi. The same case we were done for EOW also. Then, and when we could prove that the funds were brought into India and acquired assets. So for doing this, we had to prove that how the company actually raised the funds outside India where we cannot see. We have no records of foreign countries. We have no records of the bank statements of foreign countries, but we ended up in showing that money was brought in India. So in this case, the company has created 3 types of bogus entities. Certain entities were he used only for transferring funds from one entity to another entity only to show that he's paying money for expenses, he's paying money for certain services that they are taking. There is another set of bogus entities which were created only to show that they are the vendors from whom they are purchasing the software. So the funds were paid to be transferred to their bank accounts. However, there was no software that has been purchased by them. There were purchase orders, work orders, but as such, there is no software, and the company was non-existent. There is no single staff in that premises that they claim that the company is existing. So basically, that is the second set of bogus entities they were keeping to book the purchases. Third bogus entities, they maintained the set of bogus entities. They maintained to only pass through the funds for expenses of development of software. So the software companies were non-existent. The monies that they had sent was rerouted through 7 to 8 layers, and the money was taken out. So there is another 4th layer also, where actually the beneficiaries were there, with whom the monies were paid, and that money in the second or third layer, they have used it to acquire assets. So when we are unveiling all these bogus entities, there are about 300 to 400 entities. We have to separate the entities which were under purchases, bogus entities, which were only passing through entries, which are only passing through the development expenses. They are just rerouting. Money is coming, going out and coming back, going out and coming back. It's only to confuse. The 4th one where they actually taken the bogus entities, there were no bogus entities much. In second or third layer, they have taken out the money and they have utilized for acquiring the properties. So in the court of law, when we have to prove what is what, why these bogus entities, what they did. So everything, it has to be clearly explained. Here, as a forensic auditor, we have a challenge where the advocate is a non-technical person, and the, of course, judge is a non-technical person. So we have to explain our report or our findings in such a crispy and short statements where the advocate as well as the judge would use just 10 minutes time or maybe 15 minutes time to explain the fraud or diversion or siphon. We have to do in just 10 to 15 minutes. So our explanation to our technical subject to non-technical subject, proving that there is a fraud, there is a siphon, is a very difficult task. So that is more important for us to do in a very short and maybe in an executive summary manner, or in a way we, maybe in a 1 page or 2 page or 3 to 4 pages, we should be in a position to explain entire case along with the evidences as provided to investigating agencies and to the court of law, so that the case can be proved. Otherwise, our reports are just flying with them. They don't act upon because they don't get any clues from the report. If they don't get any clue from our reports, if they are not conclusive, then there's no much action taken upon by them. It's not appreciated by them, first of all. So many times it's just a normal way of taking the report and keeping it in the reports. Otherwise, if they are taking it forward, we have to give a better report with it. Even if we can prove a point out of 10, if we are able to prove 1 point very clearly, it is very helpful for the agency which is appointing us. Not necessarily every point we are able to prove it with sufficient evidences. Many times we don't get that kind of evidences, so we don't need to go and comment on which we can't land and conclude that point. But as other points we can just report it, but main points we should have evidence to prove that there is a fraud or diversion or not. That is more important for them to understand. If we in a particular this FCCB case, we could do all this successfully. And they have actually the directors of all bogus companies have come to ED. They have given the statements saying that we have actually passed on certain bogus entries, the transactions, the amount they got, the commission they have been paid, everything they disclosed. They disclosed entire data in Excel format year on year. So we were successful in proving that these are bogus companies, and they accepted the crime, and ED could successfully put their file their charge sheet in the special court. So that was a successful show of that for forensic audit, where we could even get the Swiss bank accounts formally through government. So that was a major success. Then in another case where we have seen, there are certain promoters, there are certain companies which are using certain loopholes in the system. For example, if you see DSK case, they have collected funds as unsecured loans. Unsecured loans accepted by partnership firms. So, does the partnership firm is allowed to accept unsecured loans? There is no barring across anywhere under any law that a partnership firm cannot take unsecured loans. So they have taken that route to collect money from public, and they have taken as unsecured loans. But they have ignored one particular point: the partners and their relatives or their known people. There is a limitation on the upper limit of number from whom they can collect the unsecured loans. Here they have broken that rule. Otherwise, there is no rule under any act that a partnership firm cannot accept unsecured loans. So they have collected crores of rupees from public as unsecured loans in partnership firm, and they have issued the certificates also. Without knowing this, I do not know whether auditors have realized this or no, but the ED has acted upon it, and they have confiscated all the assets of the company, where you could view how the money is being siphoned off. Another interesting and common area is share premium. I see across TD, SFIO, even police, and even RBI also many times I see, SEBI also I see, CBI also many, they struggle with the share premium. They think that is right. Even auditors think by raising money through share issue of shares at a very high premium is a legal route. But many times I have seen where share premium is issued at initial years of the company that is being incorporated, maybe early years, maybe first year, or maybe just even before starting the business, or negligible income, they raise the money through high premium. And this premium money, generally they are diverting to their associate companies. And from associate companies, they are taking it to another company. From there, they are siphoning off or taking back paying back to the investors who are paying the premium. That means the money is repaid in the background. The auditor who is signing the first balance sheet in which the share premium is raised is unaware of all these things. He will be signing the balance sheet saying there is a transaction in the bank account, there's a money that has been received by the company. So the money is lying and that money is used for paying to another company as a business transaction. But the signatory of the balance sheet will not be knowing the second level, third level, or fourth level of the transactions. So unknowingly, he is signing a balance sheet where shares are issued at a very high premium. Though there is a share premium calculation, future cash flow, discounted cash flow mechanism, certification is done, but we need to see whether the funds raised through share premium are used for business purpose or for just paying it to some group company or associate company or maybe to any other company without any legitimate business transaction. This is more important to understand because the statutory auditor signing the balance sheet in which they have raised premium will not be knowing the later stages of the utilization of these funds. So unknowingly, when he signs his balance sheet, the investigating agencies call that particular auditor and ask, there is a share premium. How did you get this? How have you seen the valuation? He has to explain so many aspects, why there is a share premium, who evaluate it, why they evaluate it, how they, what are the points they relied on for arriving at this share premium. All that is okay. We can explain. There's no fraud in raising funds at a premium, issuing shares at a premium, raising funds. But the auditor has to ensure the funds raised through this route are utilized for the business purposes. If that is not ensured, there is a problem. So, in the second, third layer, the promoters are using these funds and repaying back to the investors, and the balance sheet only 2-3 layer balance sheets are only carrying the numbers in the balance sheet, but there are no funds as such, and there is no business that is being done in those companies. This is a serious fraud that is taking place, mainly in COVID case. If you see, this is rampant. Where they have taken in each company more than 100 corporates are investing. They are as the shareholders. They are the shareholders, and they are investing in the equity shares of the company, which is the company to which the coal block is allotted. So, however, those 100 companies are not having any business activity. They only have another set of 100 equity shareholders from where they got the money in small amounts, then they pulled out, then they went to the final front-end company which were allotted the whole block. So when these things are investigated, they found that this is only belief-based companies only carrying the money to company in the name of share premium, and that money was only reported back to some other companies in a similar manner where another company has been dealing in different business activity, then they realized, then they cancelled all the allocations that time. We have initiated part of the question for CBI. Now we are also doing for EDU and question. This is the major route that they have chosen for raising money in the books of accounts as such. But this is only an entry that they made through bank accounts and the balance sheet. In balance sheet, there are numbers, but there are no funds, there are no business activity. So the auditors, whether they play chartered accountants, whether they are playing a role of a forensic auditor, or they are playing the role of statutory auditor, or any certification they are doing, they have to have clear understanding of the business of the client to whom they are signing. So without understanding the same, we cannot keep our records clean and hygiene. Similarly, we have to have all the understanding of the business activity of the client. At the same time, when we are playing the role of the forensic auditor, we need to understand the case thoroughly, the line of business that the company which we are investigating. Without understanding that, probably their conclusions will not come out well, which can be used by investigators. So this is what my experience in my audits, which I have done for several investigative agencies and even to regulatories that we have done. So there's a clear expectations from them, from us as a forensic auditor, and also from the statutory auditors who are signing the balance sheets. So we have to be very, very clear what we are doing on this.
Hello, Lakshmi madam.
Hello. Yeah. Can you see me?
मैं आपका मैम वेबकैम ऑन करो आपका.
There and there. Hello.
हाँ मैडम अभी दिख रहे हो आप.
Yeah. Yeah. So by time, I think, right?
Sorry madam.
My time is up to 6:30 and I'm through.
हाँ ऋषभ सर कंटिन्यू करो. ऋषभ सर.
Okay. We have completed ma'am's session so far.
Yes, Rishabh.
All right. Lakshmi ma'am, it is an honor to have been asked to offer a vote of thanks to you. First of all, a very happy birthday again from all of us, and thank you for coming up today.
Happy birthday, ma'am.
And to say that your session was insightful would be an understatement for us. Your practical insights, the way you have explained how different enforcement and investigative agencies approach this, it was extremely useful for someone like me who's been in this field as well. And again, on behalf of WRC of ICAI, all the participants, my fellow coordinators, and even fellow panelists, I would really like to give you a hearty vote of thanks. Thank you so much, ma'am.
Thank you, sir. Thank you.
I would also take this opportunity to introduce an eminent speaker and faculty with us today, CA Harish Dua. Welcome, sir, to the platform of WRC of ICAI. To give a short profile of Mr. Harish Dua, Mr. Dua is an audit and business professional with over 38 years of expertise in the area of governance, risk, and compliance. He specializes in the areas of ethics, internal audit, and investigations. He's a chartered accountant from England, a certified public accountant from USA, and MBA from University of Connecticut, USA. Mr. Dua is also a certified fraud examiner from the Association of Certified Fraud Examiners USA and a member of the Institute of Internal Auditors of USA. Mr. Dua started his career in London, UK, where he spent the first 10 of his formative years. Thereafter, he spent another 10 years in the USA working with PwC and Pitney Bowes prior to returning to India 25 years ago. In India, he has worked for a few marquee companies like PepsiCo, Bharti Airtel, SRF, Jindal Steel and Power, along with a brief stint as CEO of the Institute of Forensic Accounting and Investigative Audit. His last assignment was with JSPL as acting CFO after serving as President Internal Audit for 3 years. Mr. Dua is now retired from active service and is practicing as an independent advisor. Currently, he is serving as advisor forensic accounting and investigative standards with Digital Accounting and Assurance Board of the Institute of Chartered Accountants of India, with a responsibility to prepare new standards. Mr. Dua is also serving as an adjunct faculty at the School of Corporate Governance at the Indian Institute of Corporate Affairs, which is a part of the MCA, on programs for independent directors and future board members. He's also adjunct faculty at the Jaipuria School of Business on the subject of business ethics and corporate governance. It was wonderful to learn about your illustrious experience, Mr. Dua, and we look forward to being enlightened by you over this session. Over to you, sir.
Hello, am I audible? Can you hear me?
Yes, sir, you are audible.
Okay, great. Thank you very much for inviting me and for reading the whole profile. I think it's quite long and boring. And next time I'll send you a shorter version. I hope that my content is more impressive than my credentials, because I think after all, that's what matters to the participants. I see there are a very good, contingent of people you have, over 100 people, 127. And I've been asked to give my thoughts on the new forensic accounting and investigation standards that have just been released. They're not the final product, in the sense that there are more in the pipeline that are coming, and I'd like to. How much time do I have, Rishabh? I'd like to basically, work according to your requirements.
You have time until 8 p.m., sir. So that's roughly 1.5 hours.
Oh, 1.5 hours. Okay. Well, I have a 1 hour presentation, which can go over a little bit. So that means that we will have enough time towards the end for a Q&A. And I would prefer to have rather, enough time dedicated to question answers, so that we can accommodate the need of the participants. So with that in mind, let me show you my screen. I will share my screen, and it will, like I say, it'll help me take you through what I have to present. Okay, are you able to see my screen?
Yes, sir. Your screen is.
The slides open.
Okay.
The slides open.
You can take it in the presentation mode.
I can take it to the presentation. All right, I'll do that. Okay. I need to close this sidebar also, because then I'll get. All right. So now, basically, the subject matter is, of course, forensic accounting and investigation standards. A little caveat before we start: I'm officially an advisor to the institute and working on this project, but I'm not making this presentation in my official capacity, which means that whatever I say are my personal views, and I take full responsibility for them. The content that you see in front of you, which I'll take you through, is a combination of the official literature and my own personal views and personal material. I made a small assumption in making my presentation today, in that this being a refresher course, I've assumed that most of the participants will have some number of years of experience in these two domains of forensic accounting and investigations. Which means that I probably will not spend too much time on the fundamentals and basic concepts, rather spend more time on the new things and some of the important matters that are getting released as part of these standards. There is a compendium of the standards. I hope you all have access to them. I sent a link to the regional office people. But don't worry, if you don't have the standards and have not got the time to go through them, I will give you an overview today, and then with your access to the soft copy, do download it and make sure you go through it, because it's a very amazing piece of document that the institute has put out. It's 120 odd pages, and you'll find it very, very informative. What I'll do today is in an hour is basically give you a background on this and talk about the objectives, why we put it out, where we are vis-a-vis the project, cover a few documents in overview, like the overarching documents, which basically set the tone of what this whole agenda is about, and then very briefly, like 1 page per standard, give you a quick overview, because we don't really have the time to discuss them in much detail, but I'd like to give you a gist of it so that you appreciate what's in there. Okay, so with that in mind, basically the quality of a leader such as the ICA is reflected in the standard they set for themselves. And this is the premise we've taken as we've embarked on this journey. There is a fundamental change in thought that we are about to bring. Before I start, I'd like to take you through what this fundamental change is. See, the main thing that has come out from a great amount of deliberation in this area is that an audit is not the same as a forensic accounting assignment or a fraud investigation. Conversely, neither of these are an audit. So we have so far been using this term called forensic audit in a very loose manner. And it's in fact a bit of a misnomer, a misleading term. See, audits are generally conducted and culminate with the expression of an independent opinion, which is not the case with forensic accounting and investigations. There are no reports issued that express an opinion by the professional. That is one of the basic fundamental differences between the audit and what we do in this domains of forensic accounting and fraud investigations. See, these two domains, they have these assignments which culminate with the reporting of evidence discovered. The job of the professional is to look for evidence to support certain hypotheses, and at the most, what he will do is he will, apart from reporting what he found, also provide certain conclusion to based on the analysis work that he does on the evidence that he discovers. At no point in time he expresses a written opinion that says there was a fraud that has happened there. If he's doing that, that's not permissible, and that's something I would wanted to emphasize to you, and also set the tone for making sure that we start correcting the terms that we use. We should avoid the term forensic audit as far as possible. What we should talk about is forensic assignments or investigation assignments, which basically are not an audit at all. And since we, as members of the institute, conduct both of these things, audits and these kind of assignments, we ought to basically educate the user of our output to understand the distinction between these. And that's why I wanted to take a minute to go through this and clarify what is the key differences between these terms. And I'm taking a little bit of a time to go through this. And before I do that, I would like to remind you of what the fraud definition is in the Companies Act. See, if you go through the various elements where fraud is defined, section 447, there is one key term there which talks about the intent to deceive. Okay, now in audits, we are never collecting any evidence where we start trying to prove the intent, or evidence collection effort is primarily directed towards, ensuring there are no material misstatements. And those misstatements can happen as an error, or they can happen through an irregularity. If it's an error, there is no malified intent. But if there is an irregularity, somebody intentionally did something wrong. So we don't get into the distinguishing between the two. We just report what we find. And when the first time we ever get into intent is when we are doing a fraud investigation, where intent is the key element, and the evidence that we collect also has to support the intentions of the suspects. So we'll talk about some of these things, but I wanted to basically set the tone and put it on the right perspective, because section 447 forms a big part of any of the work that we do in the area of forensic accounting and investigation. There is always this assumption by the user of our work that we are trying to get a better appreciation and an understanding of the possibility of frauds based on the work that we do. And therefore, it's very important to keep in mind the fact that when you have this fraud backdrop in the work that you're doing, the evidential matter has to be directed towards the intention of the people involved. Okay, so with that background, let me now tell you what's going on with these standards. In fact, 1 second, just wait a minute. I wanted to unhide a couple of slides that I had prepared, and I think it's worth maybe using them because they just kind of clarify in a better way the main differences between audit, forensics, and investigation. And it's important that you realize that when you're doing an audit, your objective is to express an opinion on true and fair, and your focus is a review of the books of accounts. Your approach is a test of controls and substantive test of transactions. The target is to identify any material misstatements in the financial results or financial position. And the skills you need are directed towards testing and checking. And your presumption is, of course, to make that everything is correct unless proven incorrect, so on and so forth. But when you're doing a forensic audit, your objectives are slightly different. And the objective is to discover facts and evidence. And the focus is on transactions and balances, purely simply, very much focused on the numbers generally. Approach is selective tests to confirm a suspicion or an allegation, like diversion of funds. And your target is to identify the nature of the violation. Okay, has the person or has the company diverted the funds or broken certain, provisions of a debt agreement or things like that. The skills required are basically scrutiny and analysis, and the presumption is of neutrality, meaning there could be something wrong or there could perhaps nothing wrong. So you remain neutral in many ways. Now, but when you're doing an investigation, it's one notch above the forensics. Okay, it actually is to identify any violations of a legal, ethical, or contractual nature, primarily ethical nature, fraud. The focus is to evaluate the intent of the actions of the individuals. The approach is to collect evidence to prove or disprove a hypothesis. And the target is to understand the modus operandi, which is basically a combination of a number of hypotheses that paint the overall picture. Modus operandi is the full picture. The skills required are probing and interrogation. And the presumption is that there is a possible guilt and we need to discover it if it's there. And in an investigation, the work shifts beyond transaction balances, beyond the basic work, the audit work that we do, and it starts focusing on individuals, because frauds are always and only committed by people. Frauds are not committed by systems, processes, other things. People commit frauds, and the investigation is directed towards the people, what they've done, and what their intent was in whatever they're doing. So that is why it's important to make sure that you understand which of these domains you're in. Are you doing an audit? Are you doing forensic analysis and accounting? Or are you actually doing an investigation directed towards identifying certain culprits? Okay, so and the fraud ends points are also very different, because in an audit you will not be able to do all that you're required or expected to do when you're doing an investigation. The best you can do in a statutory audit is to highlight any possibility of fraud and point out those areas where you think there is some indication or red flags. In forensics, you have to prepare the evidence that can be presented in a court of law and let the court decide what exactly has happened. It is not the job of the professional to basically express an opinion of guilt or innocence. That is the job of the court. And then in the investigation, the general end point is where you are able to take it beyond the numbers and also identify what some of the people did and possible culprits, because the evidence will speak for itself as to who has done what. Okay, so that is the background I wanted to just set. I'm going to just stop for a second, and I'm going to ask everyone if there is any fundamental issue you see with what I have presented so far, vis-a-vis making the distinction between these domains. Because it's important to get that clarity right away. If there is any confusion in this area, then I would like to clarify it now before I move on to the rest of the presentation. Anybody, any thoughts by anybody? I guess there's a chat box where we can do this. Question for organizers.
Yeah, we have a chat box.
Okay.
So I request all participants, if they have any questions, please write in the chat box section.
Great. Sharon, may I request you to just keep an eye on that chat box? If some questions come up, you can maybe point it out to me, and I don't mind getting interrupted in between to answer questions. I think it's generally a good idea to be able to clarify doubts as we go along. There's no need for us to wait till the end, but yeah, we will dedicate some time towards the end for Q&A. So don't worry. I'll go back to my presentation now.
Yes, sir, you can.
Okay. All right. So moving along, I've got a similar thing on internal audit versus this, which we don't need to get into because the idea is the same. So we'll save a minute on this. Now, as far as the actual standards go, this basically happened. These standards, the thought and the idea came about in July and August of this last year, where this whole concepts of putting together certain standards came into deliberation. Those of you who may have undertaken the FAFD course, the Forensic Accounting and Fraud Investigation course, what is the full form? FAFD, Forensic Accounting and Fraud Detection or something like that. Okay, so this course is already in place under the aegis of the DAB, that is the Digital Accounting and Assurance Board, and the members of the board had a deliberation that we ought to think along these lines, and then a certain proposal was put up to the council to standardize and harmonize the assignments that are getting conducted in this area, basically to address the need to discover the evidences which are subject to high level of scrutiny in a court of law. You may know, those of you who are practicing and have had exposure to the law and the courts proceedings, that a lot of these fraud investigation reports that end up there, or forensic accounting reports that end up there, get torn apart at the court level through cross examination by the opposing lawyers, because we've not necessarily paid due attention to dotting the I's and crossing the T's. And therefore, we felt that we ought to have certain standards that guide the professional in that regard. Now, the other thing, of course, was that we were proposing to generate some intellectual property in this area, because there's not many people at all who, in fact, there is no accounting body in the world who has come out with these standards. And we are the first one to do so. The capacity building of members was, of course, another driving force behind thinking about these standards. And once we have these standards, then not just our members, but we could offer them to other law enforcement agencies also for their benefit and use. So with that in mind, the proposal was made to the council. I'm sorry, press the wrong key there. Proposal was made to the council, and on 1st September, there was a press release issued by the then president, in which we launched this project. A detailed project plan was put together, a full list of standards was drawn up, topics were decided, contents were thought through, and a timeline for completion was put in place. 9 highly accomplished experts from the domain were chosen as the study group members, including 5 central council members. And all of these people, this team, they met many times. In fact, at least once a week for 5 months. We had these study group meetings, and in between there were a lot of other meetings going on, small groups, one team for each standard, so to speak. And all of this culminated in workshops towards the end of December, I think, mid to end of December. The working teams were there, one for each standard, where 7 odd members were there. So there's a lot of work that happened. Almost 60 odd people worked on it in a very highly disciplined manner. And I will take you through the process that they followed later. But the objectives of this whole standards, as you know, is to codify the best practices, clarify the expectations and attributes that are important in this area, set a common terminology, definitions like the one I just covered vis-a-vis, forensic audit we keep, so that's got, originally we were going to define that, but that got nixed altogether because of the reasons I explained. And then, of course, have quality benchmarks as service, so that we know that there are certain key things that need to be in place. Otherwise, the work may be classified as substandard and so on. Of course, harmonizing and improving the performance of our members and the output they generate is another key objective. Provide knowledge and guidance to the members. Set and evaluate the level of performance of those professionals who are conducting work in this area. At the end of the day, our ICA brand is the most important. We would rather not see substandard audit report substandard reports getting issued, finding their way all the way to the court of law and getting torn apart there. So that is one of the overriding objectives to protect the brand value of the institutes. Now, I will take you through these standards in the next half hour. But the key features of these standards are listed here. That these are some of the most comprehensive standards issued for the very first time by any accounting body in the world. In fact, there's no other body that has, the best they have is like gold standard as part of their other standards, like their auditing standards have a forensic accounting standard or something like that, or an investigation standard. So the US has something, the UK has something, Canada, Australia. These accounting bodies, they do have something in the area of forensics or investigations. but not what we have put out here. And when you see what we put out here, you'll really be proud of what the institute has done. Secondly, they cover many areas from the key concepts, which we'll talk about, to managing the engagement, to the whole process of executing individual assignments, and also covering certain specialized area like the digital domain and things like that. They introduce some new concepts like applying hypothesis, which we will give you a quick coverage of. They are very principle based. They don't actually tell you how to do what you have to do, but what is it that you need to do. The focus is on what, not the how. The how gets covered later in guidance notes and things like that. So they will basically list what is expected out of the professional when he's conducting the work. They provide, which gives the professional adequate flexibility on how to go about it, since the focus is on the outcome and not the process of doing the work. They are, or they will be, mandatory on all members conducting these kind of assignments. So I'll cover these a little bit more as we go along, but these are the key 5 points I wanted to start off with. Here's a list of the 26 standards that we are in the process of issuing. Sorry, 24. The first 3, like the preface, framework, basic principles, I'll cover in a minute. These are overarching documents which apply to all the standards. There are 4 standards on key concepts, like what is the nature of assignment, what is fraud risk, what are the laws and regulations that come into play, and basically applying hypothesis, which I will cover in a minute. Then engagement management is a key aspect. Basically, what should be the objective of engagement, how you ought to get appointed and assigned, using the work of an expert, engaging with law enforcement agencies and things like that, and then how to go about communication with the stakeholders. Then we have 7 standards on executing the individual assignments, from planning to evidence documentation, conducting work procedures, conducting interviews, the review and supervision, reporting results, and testifying before competent authorities. There are 4 standards getting developed in the area, 4 specialized areas, like data analysis, evidence discovery in digital domain, laws and borrowings and related and connected parties. And then we will also have 1 standard on quality control. So that's a quick overview. What you see in yellow is what is still in the pipeline. What you see in the white, the names in white, are the 16 standards that have already got issued. The blue is still under draft stage, so that's where we are as far as the status is concerned. Now, they apply to all institute members, as I mentioned, and they apply to all forensic accounting and investigation engagements. If there are any limitation on their applicability, that will get made clear in the standard itself. Now, one thing to note here is that these assignments that we've been talking about, they can be conducted by anybody, including non-members, as you know. There is no government prescription about who can or cannot do these kind of assignments. So many people start calling themselves forensic experts because they don't need to show any certificate of any sort to be able to say they are a forensic expert. But we believe that with these standards in place and with members following these standards in the mandatory way, the government may choose to make them mandatory on everyone conducting these kind of assignments. For example, there's some thought about frauds in listed companies or frauds over a certain amount, which the government may be mulling, so that at least the big and important assignments or engagements will start becoming, or rather they may come under the purview of these standards. Now, I already mentioned they're principle based, which means that the focus is on the outcome of the subject matter and not the process. They basically provide for what is expected of a professional and not the how. And like I said, the how will come later in the form of implementation guidance notes or technical technical guidance notes. Let's talk about quickly the three overarching documents of preface, framework, and basic principles, which preface basically introduces the standards. It outlines the process of standard setting. Each standard goes through a 6-step standard setting process or methodology, starting with the DAB selecting the topics and timeline. There's a study group formed to review the standards. The drafting teams put a standard together and the review team looks at it. The review team, once it approves it, it goes to the board stand DAB, which is the assurance board. Once DAB approves it, then it gets exposed for 30 days to the general public. The general public, including non-members or other experts, and we reach out to all these relevant stakeholders, including the government agencies and regulatory bodies. They all are invited to give us their inputs, and then we go through their inputs and finalize the document. Again, the DAB will first look at the revised version before it goes to the council for approval. Council may make their last minute changes, and then the final version gets released. The only difference between this and the guidance notes is that the 30-day exposure period is generally skipped when we're talking about guidance notes. So that's the process of going through. It's a very rigorous process. A lot of comments come in. People question this, that, and the other. For example, up to now, we've had these 16 standards which I mentioned earlier. They got released in exposure form through 3 waves. The first wave basically was the 3 overarching documents. Then we issued another 4 of the 100 series and 2 of the 200 series, 6 altogether. And then in the third wave, in the dates that you see, we issued another 7 standards, 2 in the 200 series and 5 in the 300 series. Here's a snapshot of the 232 odd comments that came in from 83 different people, including the regulators, SEBI, CAG, MCA, and so on. And then, we were quite successful in getting a lot of good inputs that enhance the quality of the final product. Okay, so that's what we did with the standard setting process. The framework is something that we come out with, which sets the structure of how these standards will be put together in one cohesive manner. They also define certain key terms and establish a fixed format of 6 sections that we follow. So there is your framework in the form of a pantheon with 4 pillars. The definition that you see on the right-hand side, forensic accounting and investigation definitions are there, and they form the overarching thinking. The basic principles, there are 10 basic principles which I'll cover. They basically form one of the key pillars. There are 100 series key concepts that I mentioned earlier, and then there are other standards beyond the 100 series. The crux of the standards are your 300 and 400 series. And then there is this non-mandatory guidance notes that are also part of the whole framework. All of this sits on our code of ethics, which forms the foundation over which all of this takes place. Each standard is following a fixed format, introduction and scope, the objectives of the standard, what is the actual crux of the standard in terms of requirements, the profession, what does he has to do, the professional. The explanatory comments which elaborate on some of the requirements, and then what kind of documentation that we need with regard to the work procedures that we conduct for that particular standard, so that we know that if we have these work documentation on our files, we've complied with the standard and the effective date these standards. So there you have it. That's the framework. And the third overarching document is the basic principles. The basic principles are actually 5 attribute principles and 5 conduct principles. The attribute principles basically tell us what the professional ought to have. He ought to have independence. He ought to have integrity and objectivity. He has to basically take due professional care, maintain confidentiality, and the competence and skills required to do his job. Now, the conduct is how he ought to execute the work that he has to do. There are some important elements that come into play in all the standards, in all the assignments that he undertakes. He has to understand the situation and the context. He has to give finding the truth as the paramount objectives. Everything overarching basically is the truth has to prevail, and that his job is to find the truth. And he has to respect the rights and obligations as he conducts his work. He should not mix the facts from his own opinions. The two have to be separate. And he has to do his work in a very quality conscious manner. So these are the basic principles. Of course, the standard gets into the details of each one of them, and you will find that there's a lot of very important gets covered in these documents. So these are the three overarching documents. Then we get into series 100 series key concepts. These are the four that I mentioned earlier. Let me quickly take you through one by one what is the gist of these standards. And the key concepts are also concepts that basically are relevant to all the other standards also. For example, if I'm talking about laws and regulation, I don't need to mention about laws and regulation in all the other standards. 130, standard number 130 will basically cover that aspect. So on and so forth. Similarly on hypotheses and things like that. So now 110 on nature of engagement basically says that you can either be doing a forensic accounting assignment, an investigation, or you could be providing litigation support to the client. Now, just remember one thing before I get into this. When we talk about these standards applying to all members, you have to remember that there's a big chunk of members who are actually practicing, and another big chunk of members who are in industry. And in industry, there are members who are doing some audit and work or investigation work as well, especially in the internal audit domain. And they may get into doing these kind of assignments, forensic accounting, investigation, perhaps even litigation support. But generally, litigation support is provided by those who are in practice, and they do get engaged by the client to do some preliminary work in these areas, for example, in forensic and investigation. And then the output from the first two may form the basis of further support, professional support in the form of litigation, where they start acting as witnesses on behalf of the client. So that's something to keep in mind. And that is one of the things that these standards recognize. And these standards basically therefore say that you have to understand the mandate which you are under, one of these three, but neither of them is anything to do with an audit. Okay, so keep that in mind. Where the mandate requires the application of accounting skills to discover the evidence, then by nature the concepts of forensic accounting shall apply. Where the mandate requires the need to discover and evaluate evidence for a specific purpose, such as to help establish a fraud or an fraudulent intent, or to identify possible suspects of a fraud, then of course you are doing an investigation. Now all stakeholders shall have clarity on the nature of the engagement, meaning not just the professional, but also the user of our product should have clarity on what is it that we're doing, one of these three. And it could be a combination of these three also. You know, you can move from first one of forensic accounting to litigation support, or first to second to third, and so on and so forth. But whatever you do, you cannot be claimed to be doing an audit. Okay, which means that the connotation of an audit of expression of opinion is not there. 120 basically talks about fraud risk, and it says that what you have to do is to keep in mind that there is a possibility of certain fraudulent events or suspicious transactions that you will be asked to look at. And that has to be this form a basic premise in which you will conduct your work. In other words, be alert to the fact that a fraud could or would have happened. It of course defines fraud, and the characteristics of fraud triangle are getting captured in the standard, not in so many words like fraud triangle, but the concept is there. The standard also defines risk and then combines the two to say what exactly is the fraud risk. And it basically says to take a preliminary fraud risk understanding of the areas that you've been assigned to look at. You have to prioritize your work focusing on the fraud indicators, because you want to do a lot of work that you've been asked to do, but the primary focus or attention that you have to give is to what is believed to be fraud indicators, because they will lead you to your end product in a more focused manner. The expectation is there from the professional. The professionals will also give due consideration to matters indicating fraud risk when they're reporting their work, and therefore focus on the evidence that is indicating the fraud and fraud matters. 130 talks about laws and regulation, and it clarifies how the work of the professional can be either mandated or dictated by law, because you can be appointed in accordance with a specific law or regulation. For example, the insolvency law, IBA, the Insolvency and Bankruptcy Act is there, which gets into a lot of details about forensic work. And so you may be appointed according to that, or you may be appointed by your client, like the board of directors or the CEO of a company, who may call upon you to say, well, look, there are certain allegations, or there's a whistleblowing complaint I want you to investigate, things like that. In which case you will have a contract, a letter of appointment that defines the scope of work and stuff like that. So the standard talks about that the objectives of the engagement should be in line. Whatever you do, your objectives have to be in line with the provisions of those laws and regulations. The mandate has to be agreed with the stakeholders through a contractual arrangement, such as an engagement letter or a actual letter of appointment, or so on and so forth. And the engagement has to be conducted in line with those laws and regulations, especially if you've been appointed by those legal mandates. The professional has to implement a process-driven approach to assist in identifying significant deviations that are in contravention with the laws and regulations, because there's an expectation of looking for violations. On complex and important matters, the professional himself may seek seek legal advice from lawyers or other such experts in the area. And the concept of natural justice is also very important. This principles of natural justice, you may be aware, basically mandates that if there are certain findings being directed at certain individuals, that the individual should be given a right to be told what those observations are, and he should have the right to put forth his views, or his defense rather, vis-a-vis those kind of observations that may be pointing the finger towards him. So this is something that we ought to keep in mind. Generally, this is something that is done by the client themselves. They take a report, use it as a show cause notice kind of a thing, and say, well, look, some investigation has happened, and there are certain observations directing you as being involved in unethical activity or something of that nature. So the client would normally do that. Or if you have been chosen by a court of law, for example, certain laws and regulations, then the court will take care of the principle of natural justice, because they will ask for the defense to give their point of view, and so the people against whom the charges are raised will have their day in court to present their defense and so on and so forth. So that's what the 130 talks about. Sorry. Now, applying hypothesis is a concept that has been included here as part of the standards. And it defines what a hypothesis is. It's not the scientific hypothesis that you see in science experiments or even statistical areas. They use hypotheses and things like that. Here, hypothesis is being used primarily in a investigation kind of a scenario, where a modus operandi is there and you develop certain theories which are called hypotheses that need to be proven or disproven. The approach generally taken is that there is something is wrong. For example, you have been given the agenda of finding out whether or not there's been a diversion of funds. You develop a hypothesis that says that this diversion may have happened through certain shell companies. So you will develop this hypothesis and go looking for the shell companies that may have been the vehicles through which the diversion of funds may have happened. Now, those are the kind of theories that the professional will develop. Then he will go about doing his work to prove or disprove that hypothesis, that theory. And basically, that is the approach. Now, of course, the standard talks about how you will develop these hypotheses and how you will apply them in different scenarios. For example, in forensic accounting or investigation, they have slightly different approaches. And the provisions talk about understanding and applying the concepts of hypothesis to basically help validate the possibilities of the violations or exceptions that we are testing. We designed these methodologies that consider the hypothesis and ensure that there is a methodical and reliable approach taken to do the work. The idea is to make sure that you don't take it like an audit, where many times people just jump into it. They get an assignment and they start jumping into it and saying, let's see what we can find. Okay, it's not a fishing exercise. It has to be a very thought through approach, which includes the development of these hypotheses or theories and a focused approach to make sure that you're proving or disproving that hypothesis. Of course, these hypotheses have to be flexible. They have to evolve as you go along, and they may include new or alternative hypotheses as the assignment unfolds. You reject some things and you add some more things. See, at the end of the day, you're looking for the modus operandi picture, and this is like a jigsaw puzzle. Each hypothesis is like a piece of the jigsaw puzzle. Some are good, some are bad, some you reject because they don't belong in this jigsaw at all. So you throw away some of those assumptions altogether or those hypotheses, and then you prove or disprove the others, and to create the overall picture of the modus operandi. So that's basically what this standard is talking about. It says that after concluding an investigation, the professional shall be in a position to either prove, disprove, or not prove the theory as formulated. You may have some situation, for example, where you are not able to prove at all because you just are not able to collect the evidence required to do that. For example, if you are been appointed by a bank and the bank says that this promoter has stolen a lot of the funds that were extended by the bank to the promoter's entity, and you go to do the work, and the promoter and the entity and their people, they just don't participate or help with the assignment that you are supposed to do. I mean, what do? You don't have access to or the ability to discover the required evidence. So you have to conclude along the lines of saying that you're not able to prove one way or the other whether it's happened or not happened. So those situations do exist, and that's something that needs to be kept in mind. Then there are Series 200 standards. I will speed up a little because we have something like 15 odd minutes to finish this. I'm actually more than halfway through. I think I have 40 odd slides. Engagement objectives, and I'll cover these. 250 is not covered because it's still in draft mode. So I'll cover the first four that you see on the screen. Any questions so far, Sharon? Anybody may put anything in the chat box? Sharon, anything that has come in? No? People are listening.
Not yet. Not yet. Not yet. No questions yet.
Okay, they're all listening to me very intently, I guess, huh?
Yes, sir. Actually, at the starting of the session, only one participant commented on your this session, on your presentation part. Wait, just a second.
Okay.
One of the participants said generally forensic and investigation are used interchangeably, and your presentation has cleared his thought. So.
Okay, that's very good. I think that was my objective. So I guess I may have achieved my objective in providing a little bit of clarity in that area, because we all tend to, like he says very well, we use them very interchangeably without even giving much thought to it. So he's quite right about that. Good, I'll carry on. Going back to my presentation. And please note your comments or questions as you go along, and I will of course take them towards the end as well. Moving on, 210, we basically have this standard on what the objectives are. As you know, this already got covered earlier, but what this standard says is that it is important that you understand and document the main purpose of the engagement, and what it does is it gives you a annexure in which it defines or provides more guidance in these three areas. So let me just jump ahead to that. Basically, it says that a forensic accounting service or an engagement is along the lines of highlighting any accounting or legal violations, regulatory deviations, or contractual breaches through ascertainment of facts and discovery of evidence which is to be suitable for a court of law. 99% of the time, whatever we come up with in a forensic accounting area has to go to a court of law. Of course, I shouldn't maybe say 99, because many times out of court settlements do happen as well. But our work has to be directed as if it's going to get subject to cross-examination. That is the point I wanted to make. The focus area is critical examination of the transactions, the funds and the balances in the books of accounts or with third parties. The kind of services we provide in this area are like financial statement manipulations, fund diversions, asset tracing, anti-money laundering kind of assignments. You can have license fees, dues, tax evasions, like the telecom licenses, things like that. There were many assignments that came out along those lines. Related party transactions, valuations or estimates for loss and damages through insurance or things like that. Or of course, many are around the lines of IBC, suspicious transactions. So you have this is as an indicative list of the kind of assignments that would fall under this bucket. Now, if you're doing an investigation, the purpose of this is to examine facts and circumstances to discover evidence with the intent of proving or disproving our hypothesis that we formulated regarding certain legal violations, unethical conduct, or the possibility of a fraud by certain suspected individuals. The individual or the person angle is coming into play, as you can see. We would most of the work that we do here would be fraud investigations, including cyber frauds. Insurance or person injury claims are also investigations of nature. ethical or code of conduct violations are there, whistleblower complaints or complaints along the lines of sexual harassment come in here. Theft, bribery, corruption kind of work assignments would also fall in an investigation service. And data breach or theft of intellectual property, which has started to happen so commonly these days through data theft, they also fall in this purview. Now, litigation support is primarily along the lines of providing testimony in a court of law. So the professional would actually go into the court as either a fact witness and say, look, I did this work and this is what I found. Or he would go as an expert witness. Many times, professionals like us do called upon to express their opinion in the area of forensics and investigations, where you are then acting as an expert because you've done a number of these things and you can speak to the common person or in common man language what you see, and you can even go to the extent of saying in those kind of situations there is generally a fraud or the intent. You become a witness to help the judge conclude on the intent. There are also alternate dispute resolution kind of assignments that come in the litigation support area. Okay, so that is what we have. 210 is generally talking about the fact that you ought to know clearly what kind of an assignment you're taking. The scope should be defined in line with those objectives. Because each one of them, for example, if you're doing a fund diversion or if you're doing a whistleblowing complaint, you will develop your scope and approach in line with those objectives. And the expected outcome is to be in line with the objective and defined scope. And most often than not will be a summary of findings. Perhaps some conclusions may be required of a few in the report. Okay, so that is basically the outcome that you have to target in line with the scope and approach. The objective shall not be designed to commit any particular outcome. For example, you can't say, I will unearth the fraud for you. That would be, that's the violation of the standard. Those kind of commitments are not permitted as far as these standards go. You can only commit yourself to do your job and let the facts speak for themselves. The best the professional can do is draw reasonable conclusions based on the evidence discovered. Drawing reasonable conclusions is perfectly fine. Presenting the findings and reasonable conclusions is the extent of the outcome that can be presented. So there you have it. 210 is along those lines. 220 gets into the details of how you get yourself appointed and how do you accept the assignment that you have been given. And it talks about certain preliminary procedures and due diligence that ought to be conducted before you take on any assignment. For example, there are certain preliminary procedures that require you to understand the nature and complexity of the engagement. Are you even qualified to do it, for example? You may be a great auditor, but suddenly if you have given a cyber security investigation, do you have the expertise for that or not? Or if you don't, can you get that expertise on your team and so on and so forth? You have to conduct due diligence directed to game and assessment of the risks, inherent risks in accepting the engagement. For example, there could be situations where the client is expecting some sort of a forensic review by the bankers, and he wants you to do a pre-forensic review. कि भाई वो क्या निकाल के लाएंगे. And if you have those kind of requirements, then you have to be careful, because the objective of the promoter would be to hide the evidence so that he doesn't get caught by the another forensic audit later on and things like that. So if you are going to do something called a pre-forensic, then it has to be done in an ethical manner. Those kind of things have to be kept in mind. But at the end of the day, you have to talk to the stakeholders and understand what they're looking for and be comfortable with the agenda and the work objectives in mind. And then whatever you do, you have to get it all down in writing, the engagement letter, which has to be signed. Or if the government agency is appointing you, then you get a letter of appointment from them. Should not start any work without either of these two in hand. Using the work of an expert, very similar to what you're used to in the other areas like audits, you must have used experts. The standard gets into the details of who is an expert. It defines the term, people possessing special skills or domain expertise and stuff like that. And the fact that the professional should seek assistance and place reliance on the work of an expert where he believes he himself doesn't have the competence or the skills. And the provisions go along the lines of making a determination of the need for an expert, having the independence to and the authority to select the person or the expert and engage him and evaluate his independence and objectivity so that it doesn't impact the findings in a negative way. Also to evaluate the qualifications and credential of the expert. Also participate in defining their scope and deliverables so that they are focused and not all over the place and give you what you're looking for. You evaluate then once they give you the work, that you have to evaluate the work to make sure that it's adequate and in line with the expectations, vis-a-vis the mandate given to you, and that you at the end of the day you have to take the ownership of their outcome. Ultimate responsibility rests with the professional, irrespective of whatever arrangement you have with the expert. Engaging with agencies. Agencies are all these basically law enforcement agencies, regulatory bodies, educating authorities. These are the agencies that we had in mind when the standard was drafted and completed. They require, basically the standard says that you have to work very closely with them. And the most important thing to keep in mind is that that the law prevails. So if we're working with these agencies, they come with a lot of authority. Some of this authority goes over and beyond our commitments to the client themselves. And if you're getting appointed with any of them, then you have to agree their objectives and scope with the agencies. You have to gain an understanding of the laws that is driving their agenda, because each one of them will be driven by some other law or something, or regulatory bodies. So SEBI will have a different agenda, SFIO will have a different agenda, and so on and so forth. Again, you have to comply with the basic principles that we covered earlier, especially with regard to independence, objectivity, integrity, and confidentiality. And that that be aware that the role and responsibility is of the professional is to present facts before the agency and not necessarily go beyond the presentation of the facts discovered. And then there are certain things that come into play vis-a-vis the communicating with them, keeping minutes and things like that. It's very important. So the standard talks about ensuring documentation along those lines. Finally, I wanted to cover these last few standards. I think allow me to quickly run through them because we are running out of time. We have only half an hour, and I want to give due at least 20 minutes to Q&A. And these are straightforward kind of standards now. They actually are similar to the standards you would encounter when you have done other works like the audit work and things like that. But they do have their uniqueness, and our focus here has been generally to highlight those unique aspects. So like, for example, when you're talking about planning, you could be planning an engagement, which is basically an overall contractual arrangement between the professional and the appointing authority, like the board of directors or so on and so forth. And an engagement may include number of assignments. It's a small piece of the overall engagement. Assignment is a subset of an engagement. One engagement may include one assignment, but one engagement may also include multiple of assignments. Because let's say you've got 10 locations to look at. You will do one assignment in each location as part of the overall engagement. So what this standard talks about is that you have to basically conduct thorough planning before you start. And this should include these five key elements. Knowledge of the environment and the business, the risk considerations. We talked about fraud risk earlier, remember? Your discussion with the stakeholders, and IT aspects and what technology gets deployed there and things like that. And what kind of resources are you going to allocate to it and their expertise and things like that. Standard stuff as far as planning goes, so I won't spend too much time on it. Let me run ahead. 320 is regarding evidence and documentation, similar sort of stuff. It defines evidence, which is information written or oral. It defines documentation, which is the aggregate of all the evidence discovered, put together in the form of what papers and things like that. And it basically provides or mandates that you have to obtain evidence from reliable sources and ensure that the evidence discovered is appropriate to the objectives of the assignment. And then the documentation that you put together should be relevant and sufficient. And the ownership and custody of the documentation should remain with you. That's basically the essence of this standard. 330 gets into how would you conduct the work procedures. And it basically says that you normally would cover your work in two phases. Phase one, or the preliminary procedures, are basically behind the scenes where there is little interaction with the individuals involved because you are gathering a lot of evidence which is already there in either IT domain and things like that. So you can do a lot of work, pre-work, even before you get into the field, where you would start interacting with people. That's phase two, where there is a need to engage with the relevant stakeholders. So that is basically the essence of this standard. I won't get into the details of what all you need to do here, like pay attention to fraud indicators, and use of hypotheses. Anyway, things that we've already talked about, engaging the experts and all. So let me skip ahead and move on to the next standard. This standard has a very good annexure also. I don't know if I'm not listed here, but it gives you a lot of things that you can do both at the preliminary stage and the detailed investigation fieldwork stage, phase one, phase two. You'll find that annexure very useful. It almost gets into a guidance note mode, but anyway, it gives you a good indicative list of the work that procedures that you would normally conduct. 340 is getting into interviews. Basically, it talks about how you will engage with the people. You will basically, they deliberately use the term interviews because we're not looking to encourage things that are interrogative in nature. Generally, interrogation is considered to be a purview of the law enforcement agencies. So these standards are basically talking about how you would go about getting the verbal inputs that you need from the interaction with the people, because you are now in a people mode. Especially when you're doing an investigation, you have to understand what these people have done. So you will most likely have to talk to these people and get their verbal feedback and form that part of your audit procedures and things. So it tells you how you would go about doing it. You do it in a planned fashion, you develop a methodology and certain steps that you need to take when you are doing the discussions. You have to maintain the confidentiality and the outcome of the interview, and it should be all within the defined scope of work and things like that. So that's basically what the standard is about. And finally, review and supervision. Again, review and these terms are defined as part. The review is the examination of the work performed, and supervision is giving oversight to the people conducting the work and things like that. And yet, it doesn't get into what you need to review and how, but basically it says you apply your best judgment and the periodicity and the extent of review required, because it depends on the expertise and experience of the people doing the work. Of course, if you're doing all the work, there's no review and supervision required, because one person kind of an assignment, you're not delegating anything to whom you need to review and supervise. Review and supervision, of course, only comes in when you've delegated a lot of the work and you have to make sure that the quality standards have been met by the people who are actually doing the groundwork. So that's when this comes into play, and therefore we have spelled out some things to keep in mind. See, one thing you may have noticed, none of the standards have more than 5-6 kind of key provisions and the requirements. Very short standard, each standard is like 3-4 pages. And it's very focused on what is it that the professional needs to do. And they're very straightforward kind of thing. So I wouldn't get too overly concerned with the content of the standards. They will really put you in more of a very strong footing than the onerous, provisions to be, scare you or whatever. You would have got that kind of a gist by what all I've covered. So there you have it. The last ones on specialized areas, I'm not talking about them because they're still in the pipeline. Applying data analysis, evidence in, wait a minute. Evidence in, okay, there's some error here. Applying data analysis is correct, but the other ones are about digital domain and I'll go back to a separate slide that where we had talked about this error on this page, so don't ignore this for the time. So this is my final slide. What is it that we need to do going forward? DAB is basically issuing the remaining 7 standards. We're monitoring and tracking how these standards are getting implemented by professionals. We're going to be looking to see if there are any implementation challenges or issues. We will be issuing guidance notes in the next month or two to provide more clarity on some of the things that come into mind as and when the professional is implementing them. These, of course, will be of a non-mandatory nature, recommendatory nature, because they will have details of, let's say, if you do planning, there might be a guidance note on planning that gives you a checklist to keep in mind when you're doing the planning exercise, so on and so forth. So they would generally be of a recommendatory nature. We're looking to, of course, update the FAFD course also, because these standards have provided slightly different fundamentals and base on which some of these courses will be redrafted and relaunched. We'll be looking for certain trainers and faculty to conduct these new revised FAFD programs. So if any of you are interested, because you've done a fair amount of work in this area, would love to hear from you and look forward to your contribution to become faculty for the FAFD. You can even be on the author for some of these chapters on the new FAFD. And then we'll relaunch the FAFD program and the certificate course with new faculty. And of course, the standards will continue to get reviewed, revised, and updated as we go along. So that's what I had in mind. Time to raise our standards. Anytime you sincerely want to make a change, the first thing you must do is to raise your standards, which is what we've done. And any questions, and that's what I have in mind. I'll open the floor now to any and all questions. If there's anything playing on your mind, go ahead, and we'll look forward to. I think I have access to the chat box now.
So we have questions right now.
Yeah, please go ahead, Sharon, help out in that regard.
Yeah. So the question is asked by CA Nitin Brahma. Does the forensic investigation assignment calls for a specific qualification in forensics like CFE, DISA, CISA, FFD, etc., or a simple CA can get the engagement?
No, I mean, see, in fact, you have non-CAs doing these kind of assignments. And in fact, they're the ones who are probably lowering the quality of the work. You know, there are many what I would call for-profit institutes that say, hey, come and take my course, I'll give you a certificate. And these people start using that certificate and put themselves forward as forensic experts. In reality, they don't really have the kind of fundamentals in place that a CA would, which is why we are raising the bar and we're saying the CA have to stand apart from these kind of people. So beyond the CA, you don't really need any further qualifications. However, we do want to make sure that those people who make the extra effort of getting more of an expertise in this area, like taking the FAFD course. Some have, of course, gone and taken the global CFE qualifications, including me, for example, and there's some merit to that. But to my mind, it's not essential. I think the institute gives you enough for grounding and expertise, and you can't ask for a better grounding than audit experience because it puts you in the right frame of mind. Just that you have to be very clear that you have to be aware which hat you're wearing. Are you wearing an auditor hat or are you wearing an investigator hat? Which is why we keep talking about not to use the term fraud audit, forensic audit, because then you start calling them forensic auditors. You can't have a forensic auditor. So we're making that effort to provide that clarity and make sure that we're all aware, we speak the same language, and as members, when we do the right things, we will stand apart from the rest. And you don't necessarily need much more than the CA qualification, quite honestly. But if you have the extra qualification, I think it's good to have. It puts you on a sound footing. The client might be expecting you to have a CFE or an FAFD or those kind of additional qualifications or certifications. So I would encourage people to go for those. But as far as getting the assignments, I don't think you really need them much. Next question.
How do we ensure completeness of all hypotheses that should be validated during assignment?
How should we? What is the question?
How do we ensure completeness of all hypotheses that should be validated during assignment?
Good question. See, sometimes you will not have the complete picture. The smart fraudsters will, by nature, ensure they destroy some evidence. Okay, so when the evidence is destroyed, whatever hypothesis you develop, you will not necessarily be able to prove it or disprove it because the evidence is missing. So what you can do is you can develop a hypothesis, and instead of having a direct evidence, look for indirect evidences, also called circumstantial evidence. So many a times you have to just go around the hypothesis and try to get whatever evidence you can collect to paint as clear a picture as possible. Many times the client will go with, let's say, 2 or 3 compelling findings and will form an opinion and say, look, even though the evidence is not so compelling that I can hang the person, they are compelling enough for me to have a doubt on this individual, and therefore I don't want to have anything to do with this individual. He is holding too much of a senior position or too much of a sensitive position that I would like to take certain action on the individual and then go and terminate or suspend or whatever they want to do with the individual. So most of the times the work that you do is generally sufficient. Sometimes the client may say, no, you've not really given me much, but it's not because of your trying, it's because the evidence is not there. The completeness aspect comes into play because you may have a very good picture of the overall modus operandi, and therefore you yourself are looking for the missing pieces. Otherwise, the reader of the report will not necessarily see the fact that you have somewhat of an incomplete picture. And like I say, most often than not, you will have missing pieces. You will not be able to draw a complete picture all the time. In fact, you are very lucky if you get the full picture supported by full and direct evidences. It's because you've done an exceptional job. That's the only time you can do that. and or the fraudster was such a dumb person that he left a nice trail for you to pick up. So that's the only time you get a complete picture. Otherwise, just accept the fact that you will probably have only part of the picture in place, and you will have somewhat of a some hypotheses that are not complete. Anything else?
Yes, so we have 3-4 questions in line.
Oh, okay. I'm happy to hear people are listening to what I was saying, because that's the only time you can have a question.
Yes, yes.
Go ahead, Sharon.
Next question is, should we not have standards or guidance on peer-to-peer communication and collaboration between ICAI members? This is asked by Vijay Asthana.
Between members, or between members and other professionals, like
Between ICAI members, members to members.
peer would be ICAI members. Yeah, that's something that I think the organizers should certainly think about. Many a times, I think the institute plays a very collaborative approach to bringing together people with common agendas, and therefore puts together some sort of a platform where this kind of brainstorming can happen. Now with technology, there are many groups that can be formed. I am also a member of many WhatsApp groups where a lot of these kind of things happen. So I very much encourage peer-to-peer kind of conversations, because the best learning comes from your peers only. Okay, they don't come from me sitting here giving ज्ञान to experts that are at the other end. हम तो रिटायर होके अपने आप को ज्ञानी समझते हैं, हाँ, और आप सोचते हैं कि हमें सब कुछ पता है. But the real learning, I also get most of my learning by interacting with people who are actually practicing on the floor and doing assignments, and that is the best way to learn. And I would very much encourage that. And if the institute and the regional management can promote that kind of a peer-to-peer in this area, particularly forensics and investigation, I think will go a long way in capacity building of the members.
Yes, rightly said, sir. Learning happens this way only.
Absolutely right. No, absolutely right. I see. I can tell you, I do MBA students as well, and we basically focus on case studies and group discussions. And that's where people are awake, they're listening, they're engaged, and they are brainstorming. And when you are, let's say, in a learning platform like this, you have to have people who are engaged with you, who are applying their mind. Otherwise, तो ठीक है यार, CP credits के लिए कुछ आ जाते हैं, but वो भी I think that's also important.
Next question. I think it's a comment, maybe. The conflict between privity of contract and public accountability will be in play for a member who is internal or stat auditor of the concern under investigation.
Well, if there's a concern that is under investigation, there is no doubt that the professional has certain obligation to the concern who may have appointed him. But as far as privilege information goes, meaning can I as a professional share the information that I've come up with an external agency, then you have to keep in mind that the external agency is working under a court of law or with some authority, and they have the right over the information that I may have collected, and I am duty bound to share that with the agency. My right of protecting the information on behalf of the client is subservient to the right of the external agency to take that information from me. Now that is different in a legal scenario. Lawyers have something called what is the term? Client privilege information. If you're a lawyer, you have client privilege information where you can refuse to divulge client's privileged information. We as accountants, chartered accountants or investigators do not have that benefit. So client privilege information is not with us, and we are duty bound to share any information that we are subpoenaed to. If the SFIO or the police or anybody, people with that kind of authority working under the court of law, they ask for our file, we are duty bound to share it with them. I think I've answered the question. I don't know if the question was directed in a different way.
Just add on to what you're saying. This is also given in the code of ethics, where they have mentioned clearly that you should not share the information unless and until there is another statute that asks for it. So
Correct.
I think those go tandem.
Yeah, it goes hand in hand with that.
Yes, yes.
Good. Thanks for clarifying, Rishabh. That's a good point.
The next question is, can we have a comparison with internal audit in similar fashion as well? I think it's related to our first slide.
Competition with internal audit?
Comparison with internal audit. It's related to your first slide.
Oh, achha. Do you want me to take a minute to go through that?
Yes,
is that what you're asking?
Yeah.
If the question is directed, I can just take a minute and take the person. I did skip over that. Maybe the person is in internal audit. So there you have it. Basically, what I was saying here is if you are basically doing an internal audit, your objective is to strengthen internal controls, not expressing an opinion like the statutory audit. Internal audit, the objective is to strengthen internal controls, and the focus is on systems and processes. And the approach that you take is a broad-based testing of the controls for compliance. And your target is to identify the root cause of the control breakdowns. And your skills required are process evaluation. Of course, testing and checking is also there. And your presumption is again innocence until proven. वही जो auditors का normally होता है. And the best you can do with regard to the fraud points are basically that you will highlight the fraud indicators. For example, you will point out the fact that the control breakdown has happened because you noticed duplicate payments to the vendor. Some of these duplicate payments appear to be intentional, and so on and so forth. That's as much as you can do as an internal auditor. And then forensic and investigation is the same. I've not changed these right hand columns. I just changed the left hand one to distinguish it between the statutory auditor that you see here and the internal auditor, which is because the focus of the two audits is slightly different. I hope this comparison helped to the reader, the participants.
Should we go to the next question, sir?
Yeah, please.
It is many times alleged that law enforcement agencies or regulatory bodies are politically motivated and work on behalf of a government with a specific agenda. So, to what extent do we endorse their political agenda? If we come to know of it during the course of engagement, should we leave the assignment at that point of time or confront them with the purpose mandated by our client? It's asked by C. Nitin.
Please also name the person. I think we ought to acknowledge the people who were making the effort to raise a question. Do mention their names. In fact, I would say, why don't you go back and acknowledge the other ones also? I
mentioned earlier, whoever gave their name.
Okay, very good. So this question is very complex in nature. First of all, just understanding the fact that some of the agencies have some hidden agenda, which could be political in nature or maybe something else also. That is in itself very complicated. It means that you as a professional are looking behind the objectives of the agencies that you're working with. Some of them may have made it less hidden or more explicit and express their political views that made you your antenna stand up. The dilemma that you may face in those situations should not be much of an issue, I would say, because you should be driven by one of your basic principles, which is primacy of truth. We as professionals are working to highlight the truth, what we believe is the truth, and the evidence is to support that truth. So if you are focused on that and you are presenting your findings as they are without being biased or getting influenced by these political agencies, then you are okay. You can carry on with the assignment and you present your facts. They like it or they don't like it, it's up to them. But if they say change your reporting, then that's where you start drawing a line. If they are saying change your reporting because you may have picked up on half the facts and not the full facts, and if the full facts are made available to you, you change your own opinion, then by all means change your reporting. But if you believe that the request for change is coming because it's getting influenced with some other ulterior motive and the facts that they bring to the table, you are not convinced with it, or you cannot validate them, then by all means reject that and then stick to your guns. And the only time I would say is you leave the assignment is if they don't accept the truth that you're coming up with, because many times the truth is bitter and these people are not ready to accept the truth because it's not in line with their hidden agendas or mandates. So at that point in time, you just be a pure professional. You have to get your fees for the work you've done and you present your findings as the way that you honestly believe it to be the truth. Put your hand on your heart and say this is what it is and try to convince them. Sometimes you can change people's mind, other times you can't. There you go.
So we have next question.
Uh-huh.
If the FFD course is relaunched, will those who have already qualified be asked to undergo again?
No, nobody will ask you to undergo it again. But I think it might be a good idea if if an arrangement can be made by allowing the past FAFD certified folks to get the new material so they can do self-study and stay in touch with the latest developments. I think that's a very good point he's raising. I don't think you need to go through the whole rigmarole of taking exams and as long as you do self-certification in terms of self-studying and are comfortable with the new content, I think that should be fine. But that's my personal opinion.
So we have next question.
Yeah.
Just a second.
No problem.
What are good practices relating to detection of book fraud, as generally they are hard to detect as compared with on-book fraud? I'll repeat the question. What are good practices relating to detection of off-book fraud, as generally they are hard to detect as compared with on-book fraud?
Yeah, see, when you're doing forensic accounting, you are primarily focused on what's on the books. And when you're talking about fraud, there's a lot of things that happen off the books because you are getting into behavior of people also. Frauds are primarily conducted because people have behaved in a certain way with wrong intent and things like that. And no doubt they're harder to detect. Therefore, the hypothesis element and the interview, these two things come into play very heavily. You have to develop certain hypotheses and then you have to question the right people to be able to get the answers that you're looking for, and they will direct you to the off-book areas that will allow you to collect evidence that is nothing to do with what's on the books. So do keep in mind these two new standards that have come in, both regarding hypothesis and interviewing. those will play a bigger role on helping you do your off-book evidence discovery. And of course, now there's another one coming on digital domain. A lot of things are happening because there is so much social media content also available. For example, I'm doing a fraud investigation now in which there are allegations about nepotism, meaning the senior person is engaging his family members in the company and getting them to do wrong things and so on and so forth. Now, how do you check for nepotism? The way you can do it is look at what's going on in the social media. The names are there. You try to find out what these people, who these people are, what are they doing. Many a time, so much information comes from their Facebook postings as to what is going on. So he's right. The person who's raised the question is very right. There are a lot of challenges on off-book things, but now we're also getting smarter in cracking these kind of cases with the digital footprint people leave behind. Good. I think in answering the question very lengthy ना, मेरे को ज्ञानबाजी में जरा ज़्यादा ही मजा आता है, तो I think that's what it is.
By Jitendra Mulani.
Okay. What's the question?
Sir, our next question is, it's asked by Anil Khushlani. If the word forensic indicates collection of evidence, then is it not the word forensic or accounting a misnomer? Forensic investigation is understandable.
See, forensic accounting is a technique. It's kind of an expertise that accountants carry. Okay, and you can always have a situation where forensic accounting techniques of ripping apart the transactions and balances will give you an investigation outcome. I'll give you an example. This example is on diversion of funds. And in forensic accounting, you will follow the money trail. You will see how the money is coming to certain banks and then it's found its way through another bank, or it's got posted to certain accounts and it's got broken up. And so the accountant has the ability to be able to trace the flow of the funds from origination to end and so on and so forth. Of course, sometimes you lose the trail because you don't have access to bank statements abroad or something like that. But forensic accounting techniques are the techniques that used by even the investigators, and you can always, if you're doing an investigation, always say that you have done forensic accounting to complete your investigation. So that's the way it is. Okay. Next.
So next question is, if a client engages more than one investigators for the same job at different point of time, and both of them have different result, so will there be any reporting on the investigator whose result is not as per the perception of the client? And have you ever come across any such case in your professional career?
Which case where there are two professionals have done the same job?
Yeah, I'll just repeat, sir. If a client engages more than one investigators for the same job at different point of time, and both of them have different result, so will there be any reporting on the investigator whose result is not as per the perception of the client?
No, why? I mean, you will come up with different results if the evidence discovered is different. And if the first professional came up with some findings because he had different evidence which he was not available earlier, but later on is made available, then the second professional will have a different result, and he will report it in such a way because of the additional evidence gathered. Why would you crucify or compliment one or the other? As long as you follow these standards and you present what you found, you're perfectly fine. I don't think that's an issue.
Our next question is doing the course virtually possible for those staying outside India? By CA Mugdha Joshi, Finland. Is
I
doing the
did not
course
understand.
it's asked by CA. Hello.
Yeah, repeat the question, please.
Is doing the course virtually possible for those who are staying outside India?
Oh, the FFD course.
Yeah.
I think it will become possible
Next
because
question.
because up to now you had to physically come to class, and I think once it gets revised, that issue will no longer be there of physical presence in a room. The thinking is that we will put all the theoretical aspects on e-learning platform, and the classes may be virtual classes where we will do case studies and group discussions and things of that nature. So I don't think that hurdle will still be there going forward. People who cannot physically come to class will also be able to join the program and get certified even if they are abroad. So I think going forward it will be a good news.
So our next question is, assume that it's asked by Nitin Brahma sir. Assume that a bank employs a forensic investigator to investigate the accounts or transactions of ABC Limited, but during the course of investigation, you come across some possible fraud perpetrated by another client of the bank, PQR Limited. So do we ask the bank, that is our client, to alter the purpose or leave out the thing by just bringing it to the notice of the client?
This is too much of a hypothetical question. I'm not able to follow it or right the way through. So
Should I repeat the question?
I don't know if that will help. I think which kind of a scenario comes into play from a standards point of view, I'm not sure. Because I mean, we could give it another try. You want to repeat the question? I'll try give it another try.
Okay. Let's say assume that a bank employs a forensic investigator to investigate the accounts of ABC Limited, but during the course of investigation, you come across some possible fraud perpetrated by another client of the bank. PQR Limited. So do we ask the bank, which is our client, to alter the purpose or leave out the thing by just bringing it to the notice of the client, which is our bank? Should we leave out or just we should bring it to the notice?
No, I think we should not mix up different assignments. You should take one assignment on its own, and in the conduct of the work of one assignment, you come up with an opportunity for another assignment. You should just inform the client that, hey, while we're doing this, we saw this also. You may want to issue another assignment to us or somebody to look into that area. Why would you want to mix up the two assignments? Stay focused on what you've been appointed for and just highlight that as a potential another assignment to be conducted later or whenever. Good. Any more questions or?
Yes, sir. We have 2-3 questions more.
Oh, 2-3 more. Okay. पूरा पैसा वसूल करना है इन्होंने.
So just hello. So we have next question. Can a firm of CAs who also has partners working as IBBI registered valuers take an assignment as a forensic investigator on behalf of the RP or IP in a CIRP or liquidation case?
Yes. Yes, they can.
Okay.
I don't think there's an issue there.
Okay. The participant is unknown to me. The name is not flashing over.
Okay.
We'll take the next question by CA Damodar Nayak. What will be the reasonable fees for such assignments? The reasonable fees.
I don't know. You have to make an estimate of the time it will take you, and you have to charge it out with what you believe is the competitive rate and work it out. Generally, it's best to negotiate with the client by emphasizing your expertise, your exceptional skills, and things like that. And many a times, the chosen firm is generally the one that provides enough comfort to the client that you will be able to deliver on time and in line with the requirements. So price is not the, don't play the price game if you ask me. We need to move beyond price. Many a times we find ourselves underselling our expertise. Sometimes it's okay to give up some of these cheap jobs. That's my personal opinion. Next.
I think the questions are over.
Good. Paisa vasool hai. By the way, people who are wondering what I was munching as, it's peanuts. You know, this is the reward I got for. I'm just joking, by the way. I get a lot of reward by going through the questions. I can see a lot of mind at work, and I'm learning a lot. I'm just joking. Good. I really enjoyed it. I hope you got some value from this session. If you still have more questions, you can by all means direct them to, I guess, Sharon or Rishabh, who will get them to me. Mr. Kabra has my contacts, so you can drop me a note also directly if you want at harish.dua@icai.in.
So can you repeat once?
harish.dua@icai.in. Good.
On behalf of WRC, ICA Sharon Sangvi would like to express my gratitude to CA Harish Dua sir for taking out your time from your precious schedule and taking all the efforts in delivering today's session, sir. So I would really appreciate the way you interacted with the audiences and you made involved in your question and answer session. I would really appreciate our participants today, and they have been really interacting with you. So thank you so much. Thank you so much, and hope to see you again in our future endeavors also.
Yes, most sure, for sure. Look forward to doing that. And thanks to the Western region for inviting me. And thanks to
really
you, Sharon.
session, sir.
No, really, but you, Sharon, you and Rishabh really did a good job in conducting it very well. Yeah, so very nice of you. Enjoyed interacting with you and all the rest. Thanks a lot.
So you are very vocal, in fact.
ज़्यादा बोल जाता हूँ ना.
Sorry.
ज़्यादा बोल जाता हूँ. अपने बेटे को बहुत ज्ञान दिया हुआ है मैंने.
So इसलिए तो audience से पूछ सके आपसे.
He's not a CA. In fact, he just said he's not going to be a CA. He went and became an engineer. Chalo, so nice.
It was great. And so nice to meet you on this
Thank you
virtual
very
platform.
much.
Hope to see you in physical mode also.
Yes, look forward to it. Okay.
Yeah. Thank you so much. Thank you.
Thank you. Bye now.
Thank you for joining. Yeah. And thank you all the participants also.
बंद करूँ ना?
हाँ मिश्रा जी कर दीजिए।
Okay, thank you.